Hello everybody and welcome to my monthly Vietnam update. This is the last update for 2022 and I therefore would like to wish you a healthy, happy and prosperous new year. The final months of the year was marginally positive with an index gain of plus 0.6% in US dollar terms, and therefore the index ended the year with a loss of minus 34.9% in US dollar terms as well. The Vietnamese dong also ended the year with a slightly lower, with a loss of around minus 3.2% versus the US dollar, which compares favorably to most other currencies around the globe. Most of our portfolio holdings actually performed quite well in December, and our NAV rose plus 6% in December and ended the year with a loss of minus 19%. Which is around plus 188.1% since inception, according to internal estimates. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. Vietnam's economy had just completed 2022 with an impressive GDP growth of 8.02%, a record high in more than 10 years. This is an amazing result compared to most countries in the world. Vietnam successfully overcame the challenges brought about by COVID-19 and fully reopened its economy. But besides an impressive GDP growth in 2022, we also saw great economic achievements in, for example, industrial production, foreign direct investments or short FDIs, retail sales, trade volume, etc. Nevertheless, 2022 was a rather difficult year for most investors around the globe, and especially the Vietnamese stock market, which experienced a massive sell-off, mainly triggered by corruption investigations in the real estate sector and disciplinary measures in the financial markets. With a falling stock market, over-leveraged domestic retail investors got hurt most, with ever-increasing margin calls from forced sellers. But it looks like the VN index reached its bottom in mid of November, and the stock market since then has started to recover strongly. These government measures were certainly hurtful in the short term, but very important and beneficial for the long-term development of the Vietnamese stock market. The sharp decline of the Vietnamese stock market in 2022 brought down valuation to a very attractive level, with a 2023 P ratio for the VN index of around 9.48 times according to Bloomberg. Current valuations are certainly very attractive in comparison to other markets around the region, and in our view offer a great buying opportunity for long-term value investors. Unfortunately, investors in our AFC Vietnam Fund also lost money this year, albeit much less than the VN index or most other Vietnam funds, such as, for example, the Van Eck Vietnam ETF. Also, the Vietnamese dong went through a roller coaster ride, but finished the year with a loss versus the US dollar of minus 3.2%, which compares relatively favorably to most other currencies globally. The growth of the Vietnamese economy is expected to slow down a little bit in 2023 to around 6% to 6.5%, which is still one of the highest GDP growth rates worldwide. This lower growth forecast for Vietnam is mainly due to possibly less consumption in Europe and the US, given that both might face a recession next year. But given that Vietnam is expected to be one of the main beneficiaries with the current geopolitical tensions between the US, China, Taiwan, with an accelerated manufacturing shift from China into Vietnam, and Vietnam's huge public investment plan to support the economy, we believe that the 6 to 6.5% GDP growth target for Vietnam is very realistic. Despite global political and economic uncertainties, Vietnam's economy performed well in 2022, and especially in international trade, with a total value of around 700 billion. Back in 2007, Vietnam's trade value surpassed for the first time the 100 billion US dollar threshold. It then took around 5 years to increase the trading volume by another 100 billion US dollar. Unlike in 2022, where in only 12 months the same increase in trading volume of 100 billion US dollar was achieved. The economic situation in the EU and the US is expected to weaken in 2023, which will have a negative impact on Vietnam's export volume, which have already started to decline in Q3 2022. Despite this harsher trade value or trade environment, we expect that Vietnam will manage to achieve its GDP growth target of around 6 to 6.5%. One beneficial factor for Vietnam's economy are the much lower freight costs in comparison to 1 year ago. The Drewry's Composite World Container Index decreased by around 80% to 2,127 US dollar per 40-foot container since the peak in September 2021. It is expected that freight costs will remain low in 2023, which will help exporters in Vietnam to reduce their selling prices to customers in order to keep up demand. Beside exports, Vietnam's domestic consumption is gaining rapidly in importance, with one of the fastest growing middle class in the world. With a population of almost 100 million people, the size of middle-class Vietnamese households is expected to double in the next decade to around 70% of its population, significantly increasing the average purchasing power for goods and services. But also foreign direct investments, or short FDIs, are a key factor for Vietnam's economic success story. Vietnam managed to attract important amounts of foreign direct investment since the economic reform Doi Moi back in 1986. Since then, FDI into Vietnam has increased gradually and plays a very important role in Vietnam's economic growth story. One great example of a foreign company investing in Vietnam is certainly Samsung Electronics. The company just announced that they will raise their total investment in the country from 18 billion US dollar to 20 billion US dollar. Samsung's chairman visited Vietnam in December to join the grand opening of their largest research and development center in Southeast Asia. The center will be in charge of research and development for Samsung's mobile devices, including smartphones and tablets, as well as software and hardware products, and is expected to hire around 2,000 workers in Vietnam. Also, the economy has performed very well in 2022. The Vietnamese benchmark dropped minus 34.9% in US dollar terms. As mentioned, this fall has mainly to do with government investigations and interventions and has nothing to do with the economic performance of Vietnam. But it did bring down valuations to very attractive levels, and the trailing P ratio for the VN index is now trading at 10.3 times. There were only 4 times the P ratio of the market was trading at around 10 times since 2007. And each time the index performed very well in the following 12 months by a range between 35 and 150%. As you can see in this table, in 2009, the index rallied by around 150% in the following 12 months, in 2012 by 50%, in 2016 by 35%, and in 2020 by 80%. We do think this time around it won't be any different than in the past 4 occasions when the VN index was trading at these trailing P ratios, and hence we are quite optimistic for next year. Well, this is all from me, and I would like to take this opportunity to thank you very much for your support and wishing you all a very healthy, happy and prosperous new year. Thank you very much and goodbye.